The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Well, hello. It's great to be here with you on this Thursday afternoon.
Yes.
I'm Nadine Blaney.
I'm Juliet Sali. And yeah, down day, Nadine. You wore green. The
Tried.
market did not listen to you. Pay attention. A down day today.
I would say, though, it could have been worse.
It could have been.
You know, when I got off air, and that was 11 o'clock Sydney time, it looked like we'd erased all of the week's gains, you know, really was sort of looking pretty dismal and didn't turn out that way, or it looks like it's not going to turn out that way. Let's look at the COB Australia index and see how it has finished. We had it down by about 0.4%. That's where the S&P ASX 200 sits as the last of the day's trades go through.
Yeah, absolutely. And of course, those interest rate sensitive stocks under pressure as you would expect. But to your point, not as bad as could have been because of those energy and mining stocks. And certainly a pickup in the oil price overnight gave quite a boost to the overall energy sector. But when it comes to the three themes, it's really about this rates reality because to Scuddy's point, I spoke to him on the close, like, is the pivot party over? Are we even going to see a Fed cut this year?
Well, Stephen Miller from GSFM said he is starting to think maybe not. And I was chatting with Mark Gardner from MPC Markets on the call today, and he says that tonight's producer price, and that's why we've got producer price push, will really sort of back things up tonight. Because we do have sort of commodity prices bottoming according to HSBC, you know, that the trough is in, so to speak. And so what will that mean? And Mark pointed out that there's never been a cut come in a Fed cycle when we've been seeing, you know, manufacturing expanding.
Yeah. Although there's also that really interesting factor about the election and Biden very much, even I saw on Instagram overnight, pushing out on his stories because he's getting very tech savvy about the cost of living pressures. So is it going to be one that we see potentially closer to the US election? I don't know. That's just speculative from some analysts out there as well. But China as well, you know, deflationary pressures continuing there. Consumer prices certainly showing that those deflationary pressures are sticky. So it's a bit of a tricky world out there.
It sure is. And I dare say it's going to continue to be volatile. We've seen a lot of volatility moving into FX markets. Don't think that's going to end. But to your earlier point, you know, it was touch and go at the beginning, but energy did come to the party. We've got lots of calls on commodities coming through. Gold pretty flat as that sticky U.S. inflation really sort of dampens those hopes for rate cuts coming forward. When I was on air again, I hate to keep talking about it, but, you know, there were all sectors into the red. But it's got, you know, the poster children, I guess I should say, for rate sensitivity.
The REITs.
Yeah. And it was pretty negative. I mean, like, that's very negative there.
Yeah, centre off by 2.4%. Flipping the board and having a look at some of those others, yeah, that just really shows the overall REIT sector. But when we look at the energy stocks as well, that's where we mentioned that you did see a bit of an uptick. Let's have a look if Santos is there on the next board. It had its AGM today. I was asking Rachel from the Shareholders Association, did shareholders turn up the heat on Santos? But she said, you know, there were a few activists, but overall it was a pretty decent AGM.
All right, here's a look at tech. So back to a bit more of a mixed picture here, with WiseTech ending the session mildly positive. Life 360 is on the next page, and it was one of the picks on the call today. It was a nibble. It was a nibble from Mark Gardner. Daniel Ortiz from the Stock Doctor said, look, they're not buying, so he couldn't recommend it, but he's watching it with much interest. You know what was the real theme today? Risk mitigation and trimming. So, you know, you've got these stocks, you've had them for a while, you've made some money, you know, as part of your strategy. Trimming, taking a bit of that profit off the table.
And rotation. And, you know, I think that also points to a lot of the interesting conversations we've had about alternative investments as well when people are rotating. NextDC in focus, launching a $1.32 billion capital raising. The company looking to build out its data storage facilities. Morgan Stanley RBC leading that. It closed unchanged.
Well, it was in a training hall.
Oh, right.
Yeah, just while it's raising that capital.
Of course.
Yeah, Northern Star. Northern Star. I had to correct you on that one.
No, please. I'm like, why is it up there?
Northern Star Resources revising its FY24 guidance higher as terms of price that it can fetch for the gold. Says that it's in a pretty strong financial position.
And Netwealth, reporting $84.7 billion of funds under administration. It had just under $20 billion of funds under management. And, you know, interestingly, according to ASX data, the company's managing director sold about 1.5 million shares in the company last week.
Yeah, we talked about this one as the stock of the day. I do believe we'll bring you the official read from these folks a little bit later on, but Harry Watt from Shaw Partners Market Matters said, look, they're just a little bit wary of this one because of the fee structure, which means that revenues and margins are, coming under a little bit of pressure along with cash balances. Speaking of Shaw Partners.
Yeah, let's get to Fraser McLeod. It's been a while, Fraser. You're looking at uranium going nuclear, as we like to say. Boss Energy and Energy Resources certainly in focus too.
Sure. Yeah, I mean, it might be a very expensive market, but when we look at uraniums, for us, it's been a key play. And, you know, I've been buying on about uranium over the past few years, really, on ausbiz. It has been a while since we spoke, and the gap in that time, we've seen yet another spike up in uranium equities. So whilst we have a market that overall is looking pretty poor from a total return over the course of the next year, we certainly would not be saying that to our clients about uranium plays. So maybe it might be better off just to have a look back and think about, you know, why is this such a winning trade? So what we're looking at here is a market that over the next 4 years, there's going to be a huge supply deficit, and that's going to force utilities who, you know, don't have any other alternative source of fuel to bid up the price of uranium. We're already starting to see the beginning of that. So that structural deficit, which we know that we're going to see in our eyes a spike into the future for the price, and it is those. You're right in that it is those companies listed on markets, and a very small number of them, that are able to genuinely supply product to market that will really show the benefit to their shareholders.
Okay, so the uranium share prices so often here are just simply, you know, moving in tandem with the uranium price, which is great when the uranium price is rising. So I suppose the question for viewers is, how do you know what is the right price to get into some of these uranium, you know, still non-producers here in Australia for the most part?
Yeah, and look, it's a very valid question. So, you know, I'd say around Fukushima and from the few years that were following that, it was incredibly dark times for any investor who was involved in the uranium sector. There's many companies that have disappointed, and we're now left with quite a small number of uranium names. What is happening now, however, is you see some resource company now who are saying, oh no, we're putting your hand up, we're a uranium explorer. And that's probably quite a bullish sign to where we are in the cycle. You're also right in suggesting that we can only really truly be backing, unless we want to be buying a lottery ticket, we can only really be backing those that are able to supply to the market. And there is a small number globally listed on markets that can actually genuinely do that. So the key stock for us in terms of against risk reward would be Paladin. Now, Paladin has just today gone through a 1-for-10 stock split, and that's purely just, so it's moved up from say $1.50 to $15 a share, just a bit higher than that. And that's purely just to show more appeal to the general investors, especially in the US, which will happen. We've got institutional backing now from the likes of Fidelity, which a few months ago effectively went from next to nothing to holding a 9% stake in Paladin. So it really is the standout core play for us as a way for clients to take advantage within their portfolio. In a couple of years' time, Paladin could be a very large company with maybe about $750 million of revenue. And what we're really looking for here is the generalists to come on board, and we're definitely seeing that now. So other ways to play, if I can maybe give you another couple of examples. Yeah. Other ways to play would be Boss Resources, which you know, I'm Adelaide based, and this is a South Australian company with a South Australian mine. So they have the Honeymoon project in South Australia. We're pretty much, I'm going to say that they're opening this week. It might be this week or next week, but effectively the The mine is just days away from restarting, which is great. Duncan Craig, their managing director over the course of the last few years, has certainly ticked the box. Has got great institutional backing from all around the world, and they've done everything on plan, exactly how they said they would. In fact, they've played the recovery very, very well. And in talking to Duncan, one of the things that he says is, well, not all pounds in the ground are created equal, and I think that's definitely the case when you think of projects like Honeymoon. So Paladin with their Langer Heinrich mine that's just turned back on. Honeymoon with their Boss with their Honeymoon project that is just about to turn back on. Those are the ones that are receiving support, and rightly so, because they're going to be in the small exclusive bunch of names that are able to deliver pounds to market.
And just more broadly, Fraser, away from uranium, I guess just the broader market picture, given the fact that we're starting to pare back these expectations of rate cuts in the US and here, do you think that we're kind of due a bit of a breather in these markets that have run quite hard since about October?
Yeah, this is a momentum play. So you have stocks, even large cap stocks like CBA on our market, that everyone looks at and goes, gee, that's expensive. Who's buying that? You buying that? Who's buying it? No one's buying it. But there are global investors who would look towards Australia as now a play on Asian growth in the future, because the amount of money that they used to allocate towards China, they now can't do it. Effectively, they're not doing it, and they're looking for other ways to play. So in a smaller market, we seem to get squeezed with a lot of the money that would have naturally have found its way to directly to China for playing their equity market is now coming to us. And that is causing some concern amongst maybe domestic investors here as to, well, gee, some things are looking incredibly expensive. So from valuation ground, it's certainly not a market that's very attractive. But from a momentum play, you're having to keep a close eye on each position. So it's good while it lasts. Maybe just leave it that way.
Mm-hmm. All right. Well, Fraser, we'll leave it that way then. Take your cue. Really appreciate your time today from Shaw and Partners.
Good. Always great to chat. Thank you.
In beautiful Adelaide. And I was told that we're not supposed to be calling
Adelaide. Yes, but
Adelaide
I spoke to my friends in Adelaide. So a lot of my friends from Hong Kong days that happen to be Australian, all from South Australia, they said you cannot pick your nickname, and they love it, and they want to be called Rads and Radelaide.
All right, well, I'll keep going with it then. Hey, listen, I mentioned earlier that our stock of the day was Netwealth. Mark Gardner from MPC Markets, Dan Lortizi from Stock Doctor shared their views.
Something this expensive isn't really on our radar at the moment. So we would be selling this. It's not in our portfolios, but yeah, I think you'll probably get this at cheaper prices down the line. And look,
if you've written it up,
I think you'd be definitely trimming or taking profits. I'd probably just bank it at this stage, but. Yeah, the numbers are still good. You just likely get it at cheaper prices over time.
Got it.
They've already kind of penetrated, I guess, not necessarily the easy wins, but the direct customers that they've been targeting, and now it's going to be a slower burn over time. So similar to what Mark said, that there is a large multiple on this business, and we do think that it's still very high quality. We don't think the business metrics will break down, but that rate of growth is likely to slow a little bit unless you start to see wins in their new platform products, which obviously will attract higher revenue. So for us, we've actually been trimming in our managed funds as well. So I would call it a trim. But
yeah, to that earlier point, trimming. Both of them.
All right, let's have a look at the market leaders on a day when it was down. But as we mentioned, a lot of the energy players looking good. Core Lithium in there as well. Computershare, I noticed that on my iris, was very green.
Well, there's a broker. The price target was lifted 4.7% to $29.20 by Jarden today. So that explains that one. And Crude Energy was a bonus buy for both of my guests on the call today as well.
What did we see in the laggards space then? Obviously Netwealth we've covered. Iris was under pressure, Polynova, Helios and Sonic Healthcare.
Yeah, so a bit of a motley crew there, but lots in the sort of healthcare space as well. Let's go to the small to mid caps part of the market. And you can see some really big gains coming through from some of the energy plays. Not sure if that is company specific news coming from Vulcan. I feel like I read news on them yesterday. So we'll just leave that there before I misspeak and see what was lagging the market as well.
All right, and that is some of the laggards. Avita Medical, I mean, it had I think it said its sales weren't meeting expectations, so down by about 11%. All right, let's get ahead to what's happening tonight. It is about the ECB. Are they going to take the baton now and potentially be the first to cut? Obviously, no one potentially expecting imminently, but maybe ahead of the Fed. We've got PPI, which you mentioned, and FOMC members Raphael Bostic and also Barkin speaking.
Yeah, I think that will be really interesting because they have to comment, you know, unless it's one of those places where it's just prepared, you know, remarks only. But I doubt it. They will have to comment on that inflation read, what it means for the bar when it comes to interest rate cuts and such. So yeah, it'll be really interesting to see what comes from the ECB in terms of any forward guidance, I suppose, and timing of any rate cuts as well. Interesting times.
Interesting. All right, let's have a look at tomorrow. We talked about the CPI coming out of China today, but tomorrow trade balance, also New Zealand manufacturing trade balance and Japan industrial production, which will be an interesting one, particularly with the yen at that 34-year low, ex-dividend Kogan.com. So not a lot happening locally tomorrow, which is often the case on Friday, but we will be flying the banner, won't we?
Yeah, and I know that we do have Fiona Kimcotta booked. Andrew likes talking to her post some big news in Europe, so she will be in tomorrow morning. We'll also be hearing from Scott Phillips from the Motley Fool. He'll talk to us about some of the big stock stories of the week and what he's looking out for. And you know, the list is long, but we've got a lot of really great guests in tomorrow that you will want to listen into.
Absolutely. So we are live, of course, from 9:40 a.m. Eastern. We will see you then.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You're still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better.
Still fine with it.
Use your racket.
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it.
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious.
Don't do that.
Ow.